So price does not matter because silver is going to go through a failure to deliver. And when that happens, you either own silver and have it or you don't. You're either in or you're out. And if you're out, you'll never be able to get back in. You'll never be able to get in. There won't be physical metal for you to
surfer. The life become your best friend. Balances in your bank instead. What's up, everybody? I'm Jared, the Stacking Surfer, and I'm back with another awesome interview here. And today we've got Bill Holter, also known as Mr. Gold. And Bill was a stockbroker on Wall Street for 23 years and also a branch manager for 12 years. He's also been really at the forefront of everything with the financial reset. So I'd love to bring him up here to introduce you guys to Bill. You probably already know Bill as well, but Bill, welcome to the channel.
Good. Thanks for having me.
Glad to have you. So, Bill, I've been checking out a handful of the videos you've recently put out, and I also have one that really stood out to me a few months ago. What I've really been seeing is an acceleration of interest in silver just among stackers as well as investors are starting to ask more questions and kind of get into it. You know, a few months back, you were maybe even just 30 days back, you were talking quite a bit about constitutional or junk silver. And then even just prior to us jumping on here, we were talking shortly about mining stocks. And, you know, you asked me a great question. Do I actually own the certificates? But I'd also love to get your thoughts on where the gold and silver market is today. We've just had a few large events with Venezuela, with China also closing off silver exports. And we also have the United States that recently made silver a strategic reserve. So I'd love to get your thoughts and take on that and see what advice you could give us as stackers to better prepare for what's coming in the future.
Yeah, you're asking me about the markets today, gold and silver. And they are markets plural. When I say plural, I'm talking about the paper market and the physical market. The paper markets are becoming irrelevant, if you will. I mean, you've got $75 silver in New York, in London, yet you've got $80+ silver in Shanghai, higher in Japan, higher in UAE, Dubai, all over the world. The physical market is trading above the cash market. I'm sorry, above the futures market, the paper markets. When a spot price trades above the futures price, it's called backwardation. That should never happen because how could an ounce of gold be valued today less in the future than it is today? It can't be because there has to be some time value of money. So that's a very rare occurrence. But what you're having happen now is you've got backwardation between markets themselves. The cash markets are trading above the futures markets, the paper markets, and that's people, investors, buyers. And this is not about stackers. Silver, the big demand is coming from industrial use. But the point I'm trying to make is you have the paper markets and the physical markets separating. If you want to call that backwardation, you can call it backwardation. But what it tells me is that the paper markets in short order are going to become irrelevant.
So when you say that they become irrelevant, how do you see the price for physical being priced in at that point?
It doesn't. Everybody's worried about price. Forget about price. The bottom line is, do you own it or do you not? How many ounces do you have? You're going to count your net worth in the future in ounces, not dollars, not yen, not euros. You're going to count your net worth in ounces. So price does not matter because silver is going to go through a failure to deliver. And when that happens, you either own silver and have it or you don't. You're either in or you're out. And if you're out, you'll never be able to get back in. You'll never be able to get in. There won't be physical metal for you to buy with fiat. Fiat is not going to be accepted for physical metal. So don't worry about price. Just get capital out of the system into metal. Metal can't bankrupt. The system is bankrupting.
So, Bill, what do you say to those like myself? I have mining stocks. I've read the book, The Great Taking, or the I should say maybe the white paper. And you know, I do have concerns around that. I know in the past I've held paper certificates before, but I know using the brokerages I have right now that I don't actually own those certificates. I wanted to see if you could just tell us a little bit about that and what the risks are that we have, and ways to secure that, or even your recommendations on holding mining stocks versus physical.
Yeah, I mean, there are some very good mining companies out there that you want to be a part owner of, but you want to make sure that when the system goes down, that doesn't get taken out from under you. When you buy a stock in today's world, what happens is that that stock is owned. It's on the books of your broker for your benefit. Now, if the broker gets into trouble and they become insolvent, your shares are on their books. Your shares will go to pay their creditors, and you're out of luck. Same thing with banks. When you put money into a bank, you're no longer legally a depositor. You are a lender, and you're the most subordinate lender there is. So you're only going to you won't get anything, but when the system comes down, it goes tranches. The most senior, the next senior, and then the subordinate is on the very bottom. If there's any crumbs left, you get to fight over those. But there won't be crumbs left. And ask yourself this with a broker: how can these brokers do trades at $7.95, no matter what size? The answer is, and I mean, look at the money that these brokers spend on private jets, limos, big buildings, blah, blah, blah. The overhead is stupid. The way they pay for that is you buy a stock today, you put the money in. By the end of the day, your stock is already lent out. They earn the margin interest on lending your stock out. So the way to protect yourself, get your certificate.
Love it. I think it's great advice. The average person believes that if they have a stock on a brokerage, they own it, into their bank account, that they own it, and that it's going to be there. So I definitely know there's it's not your money. It's not just sitting there. It's always being lent out. That's how they make their money.
That's the way it used to be until 2014. From 2014 on, the West has been changing the laws, and they're all on the books now. The ink is dry. The West is set up for the great taking.
Can you help the audience just a little bit, for those that may not know what the great taking is, with just a quick explanation and maybe some of the ideas you have around preparing for it?
Well, first off, it'll only take you an hour to either read it or watch David Rogers Webb do a 1-hour interview talking about it. And basically, I just outlined it. The bottom line is, when the system comes down, your assets are going to be used to try to support banks, brokers, insurance companies, financial institutions. Your money is no longer yours. Your money is being held by intermediaries. It's on their books, and when the intermediary fails, you're going to lose your assets. But spend the hour to read or watch The Great Taking.
I definitely recommend it. I'll put links down below for everybody so you guys can go watch that. And as soon as you're finished watching this interview, I'd recommend going to watch that and learning a little bit more about it. So Bill, kind of looking at what's going on recently right now, do we have a systemic risk starting to build as far as being able to acquire physical silver? We've talked about not worrying about the price, but about gathering ounces. If China is starting to, if they're restricting as of January 1st, how much silver leaves out of their country, and we don't have really any big production here in the United States, which leaves us with countries like Canada and Mexico to acquire it from. Do you see a silver squeeze coming in the physical? Do you see a situation where it may become harder to acquire it? And the other thing I'm seeing is that it's getting harder to find product even online from online bullion dealers. They're starting to dry up, and you're having to back order things at this point.
Well, I would ask you to go back and remember what happened in April of 2023, when those 3 banks in California went down on a Thursday or Friday. I was on a short trip. Turned out really not to be a trip, because the phone started blowing up. People were scrambling to buy metal, and by Monday morning, no dealers had any metal left in stock. And I mean, we were taking orders with the promise to deliver in 6 weeks. So what I'm getting at is this can happen very quickly, and it I've I'm on the record that this will end up as a failure to delivery or to deliver, and I believe that will begin, or that will happen first in silver. It'll be followed by gold probably within 24 hours. You mentioned squeeze. Squeeze is that looks toward price. So have we been in a squeeze? Yeah, absolutely. The price is going higher. But the danger is that there's more delivery demands than there are ounces in inventory to deliver. And that failure to deliver, COMEX will issue force majeure. They'll pay people in cash. That way they can say, no, we didn't default. But make no mistake, it is a default. If you bought a silver contract with the expectation that you could stand for delivery, get the metal, and you don't get the metal, that's a default. They're from a technical standpoint, they can legally say it's not a default, but in the real world, that's a default if you don't get your metal.
I know some people that are still sitting on quite a bit of gold that would like to get more silver. Do you think it's too late for people to swap from gold into silver at this point?
Yeah, I think at 55-56 ratio, I think we're in no man's land. When we were in the 70s, 80s, up to 120, I mean, that was a no-brainer. You buy silver, and at a later date, you sell some silver and swap back to gold, and you'll get more ounces than what you would have had you bought the gold outright to begin with. So as the ratio comes down, I've said that I think people need to move in tranches. If you're looking to move X amount of dollars or X amount of percentage of your portfolio, I would do a quarter at 50, a quarter at 40, a quarter at 30 to 1, and then the last quarter you do as a just a gut feel trade. You're not going to be able to pick the bottom, but if you do it in tranches, you can't be wrong and you can't be right, but you'll be better. You'll end up with more gold ounces than you would have if you didn't do that.
And do you have any recommendations, just in general, a gold to silver ratio for an optimal situation for a person? I know that can be very personal, so you may not have an answer to that, but do you have any thoughts along those lines? I know a lot of people will ask me, how much percentage should I have in this or in that?
Yeah, as long as the ratios come down, but still at 55-56 to 1, I've said that people should be at least 70-30 in favor of silver, with an eye toward swapping silver at a later date for gold. And I told people for the last 5+ years that if you want to be 100% silver, I don't have a problem with that. But when all is said and done, you want to have more gold than silver. I mean, optimally, you want 60-70% plus in gold versus silver during normal times, but we've not had normal times or a normal gold to silver ratio, probably for 30 years. So silver has been the target. Silver is where I believe the failure to deliver will happen. And the bottom line is, once it fails to deliver, you're either in or you're out. You're not going to be able to alter your position. You won't be able to buy gold. You won't be able to buy silver. If you don't have it, you're locked out.
This is not financial advice. It's us talking about, strategies and thoughts around what we're doing. Everything else that's going on in the macro right now with what's recently happened with Venezuela. Do you see that affecting the timing of things? Do you see that giving us either more of a runway before potentially the great taking? Do you think it's accelerating?
Well, it certainly heats up geopolitics. And if you go back to what was it, October of 2022, I believe, was when Biden sequestered, confiscated, whatever you want to call it, 300 billion of Russian Treasury reserves, U.S. Treasury reserves that they were holding. That was outright theft. And from that day forward, gold started moving higher because nation after nation looked at that and they said, if they could do this to Russia, they could certainly do it to us. So that was the beginning of this move of de-dollarization, if you will. Going in and basically just taking over Venezuela, it's not a good look. I understand what they're doing, and it will. I mean, they're trying to get what they're trying to do is they're trying to get assets that are not encumbered that they can use as collateral, and obviously the oil and the gold and the silver, whatever uh, other commodities that they can take from Venezuela. But it's not a good look, and it certainly accelerates. If we're going to go to war, it certainly accelerates that that happening.
Recently we've seen silver do over 155% return, or gain, I should say, this last year, and a lot of people were watching gold as well, and a lot are invested in gold. And then it seemed like platinum came out of nowhere. As Mr. Gold, what's your opinion on platinum? Is platinum a metal worth getting involved in? Is it a distraction? Is it something that's going to be, more heavily affected by, geopolitics and what's coming up, or is it something that could be a good addition to a portfolio?
Yeah, it can be an addition, but understand it's basically an industrial metal. And if you get to the point where uh, the real economy is upside down and basically, I don't want to say closed, but severely hampered, the demand for platinum is going to drop. Platinum is not platinum nor palladium are considered precious metals. They're not considered money. Gold and silver are money. The reason you want gold and silver is because they are monies that cannot default, and the system is not tenable, and we will go through an insolvency default. The system itself is in the process of defaulting. So you want your capital outside of that system and in something that cannot default, and that something should be money, gold and silver.
Now, as we look at the precious metals, gold and silver, I want to say it was about a month ago, I heard on another channel that you were talking about getting as much constitutional or junk silver as a person could. But what's your take on things like 100-ounce bars, constitutional silver, silver eagles, and just more generic silver rounds and bars in general when it comes to stacking the physical? Do you have any preferences, thoughts, cautions, or suggestions?
Uh, Let me go at it from this angle. In a system breakdown where you've got financial markets either uh, having a problem opening, functioning, or not even open, with a societal breakdown, and that's where this is going to head to. With a societal breakdown, what good is a 100-ounce bar? I mean, what are you going to trade it for? How do you trade it? You can't. Um, the problem I see with bars of any size, 1 ounce, 10 ounce, 100 ounce, the problem I see with generic rounds is that how are you going to prove it's real silver? In a system breakdown, how do you authenticate that? In a The way to authenticate it is junk silver. Everybody knows what a dime, quarter, or half dollar looks like. As long as the date is 1964 or earlier, that authenticates that it has 90% silver. You could drop a dime or a quarter on the counter, and it's going to sound way different than a current dime or quarter. That authenticates it. It's U.S. Mint lineage, meaning it was created by the U.S. Mint. They have to be scruffy, so they cannot be counterfeited. When I say they have to be scruffy, these were in people's pockets for, you know, 10, 20, 30, 50 years. So they've got to be scratched. They've got to be dirty. If you see a clean dime or a clean quarter or half dollar, it very well could be a counterfeit. So it can't be counterfeited. It's readily recognizable, and it's the smallest unit. 14 dimes equals 1 ounce. So that gives you 14 transactions versus one with a 1 ounce bar, an eagle, a maple, a generic round, 100-ounce bar, whatever. Um, if you're trading with a farmer for eggs, you give them a dime for a dozen eggs. But if you don't have any dimes, you only got 1 ounce pieces. You get your dozen eggs or 2 dozen eggs. Now you're issuing credit to the farmer. He owes you eggs. And I would just say, like Ben Franklin, neither a lender nor borrower be. So, I mean, junk it's the best form for an American to own, and it happens to be the cheapest form currently. I mean, it's cheaper than any bars, any rounds. It is the cheapest form. And the reason it's cheap right now is because of the run up in price. You had people that bought back in the 70s and 80s, and junk was really the only way for Americans to buy silver. A lot of that's coming out of the woodwork. People saying, "Oh, I finally got my money back," or "I finally made a profit." Lots and lots of junk silver this past year was sold. Dealers backed away from it. I mean, if they're bidding $5 or $6 under spot, they're sending it to a refiner and they're pocketing that $5 or $6. But it creates an opportunity for you because you can buy the best form of silver cheaper than any other form of silver. You get the best for the least.
So, Bill, looking at all of the things that are going on out there, do you have any ideas on some timing? How much time do you think we have to continue to build our stacks before we might hit that that point of time where we're just not able to acquire anymore?
Who knows? I mean, I don't have the answer to that. Nobody has the answer to that. It could be by the time you post this interview. Who knows? All I know is we're in a structural deficit. It looks like there's going to be a failure to deliver on paper markets. And when that happens, it's game over. If anybody gives you time and or price, they're full of shit because nobody knows. And just understand that when this thing melts, when the whole system melts down, all the leverage is going to break. I mean, stock markets, bond markets, real estate markets, they're all held up with leverage. But guess what? That same leverage was used to suppress the price of gold and silver. So the way to close the gold and silver positions for these institutions, they got to buy.
When that whole system seizes, like you mentioned, there really is no price for the metals because people don't want to sell.
Yes, there is. There is a price for the metals. Look at the cash markets. Look at the Shanghai market. Look at the cash exchanges versus New York or London. Those two are paper exchanges. And you have a bifurcation between the paper market and the cash market. The answer to your question is when silver fails to deliver, gold will be right behind it. And we're talking about derivatives now. That is well over a $2 quadrillion market when all the assets on the planet of Earth are what, 300, 400 trillion. So there's way more bets than there are assets. That will collapse everything. It will collapse trust. Which thus collapses confidence. Everything runs on confidence. And guess what? The money you have in your bank, the money you have in your wallet, it's confidence money. It's been a con game.
When the quadrillions of derivatives disappear, do you see the value of other hard assets like gold and silver taking its place, or do you see a complete reset of how things are valued?
Those are the other monies. Real estate has the value that real estate has because of debt. People don't go out and buy a house with cash. It's borrowed. If there's no ability to borrow, what happens to the price of real estate? It collapses. What you're going to see is the greatest deflation in all of history of paper markets, even real estate. Across the board, it's going to be a massive deflation versus gold and silver because gold and silver are money. Real inflation or deflation versus nominal inflation or deflation. Nominal inflation or deflation would be in dollar terms or euro terms or yen terms. So it's possible that the stock market doesn't even move. And actually, you're watching it happen. You've seen gold and silver explode over the last, silver in particular over the last year, but gold and silver from the year 2000, the best performing assets have been gold and silver. The world has been in a deflation price-wise versus gold and silver since the bottom in 2000.
Anything that is based off the fiat dollar value that ties into debt. So things like automobiles and houses will continue to go down in value compared to the price of gold.
Exactly. Yes. Yeah. I mean, the bottom line is it will take you fewer and fewer silver ounces or fewer and fewer gold ounces to purchase the same thing over time. It's been that way since the bottom, uh, if you want to call it the brown bottom. That was Gordon Brown when they sold the last tranche of the Bank of England gold back in 1999. That was pretty much the bottom, and we've been in a deflation ever since. Assets have been deflating. They've been inflating in nominal terms, but deflating in real terms.
And so when you talk about the stock market not really moving, are you referring to, potentially the stock market can stay at the price that it's at? Maybe it moves up a little bit. However, gold and silver would so drastically outpace it.
That was an example. My personal opinion is the entire paper financial system gets smoked. And along with that comes the great taking, because when things get smoked, there's a winner and a loser. And if the loser loses so bad that they go bankrupt, now the winner loses too because they don't get paid. And when these institutions collapse, those your assets or customer assets are going to be used to try to right that ship.
That makes sense. Yeah, they want to be recollateralized based on whatever they can get their hands on that's left.
Exactly. That's the word, recollateralized. And you have to recollateralize because there's no collateral left in the West that's not already encumbered. That's the problem. We have reached debt saturation.
So, looking at that, some people have concerns about confiscation. And anytime the word confiscation comes up when we talk precious metals, the first thing people say is, I have protection at my house. I have ammunition. Nothing's going to happen." And that's not how it happened before. And it's not how, if it were to happen again, I think it would even come into play. But you had mentioned a few ideas about if something like that were to happen, the form it would come in. But I wanted to see if you could share that a little bit with the audience as well.
Yeah, if they think or thought that they could do a door-to-door confiscation, there will be 100 deaths the first day. That will never happen. What they'll do, in my opinion, what they'll probably do is just raise the capital gains tax to 90%. Now, that probably made people shudder, but if you pay 90% of your capital gain, and that's assuming you even have a currency at that point. But if you pay 90% capital gain and everybody's lost everything, but you have your original cost basis, plus 10% or whatever, who's the winner? I mean, you're still a winner. You have capital. And it's my thesis that when this thing busts and begins to bounce back, when the system begins to right itself, if you hold gold, if you hold silver, you're going to be like a bank, because these governments are telling you that gold is money. They're just now telling you that silver's money. So if it's money, they can't bankrupt. That's where you want your capital. And actually going one step further, in a system down, in a collapse scenario, is there really even going to be an IRS? People are going to be so pissed because everything has been so fraudulent. We've been lied to every single day of our lives. And the lies are getting bigger and bigger and bigger. The whole financial system is a fraud. And when people collectively begin to understand that, I don't know. I would just imagine people will say, I'm not paying taxes, so I'm not doing anything. I think it's going to be a societal breakdown.
I think that's a really good point. So 2 points I really liked what you said there that I haven't heard anybody else explain very well. if there is a confiscation, which you're not saying there is going to be, but if there is one, it makes more sense that there would be taxation. That's going to be the easiest way for them to do anything. And if they do go to do that, you are actually one of the few people that actually has any money, has any assets. Everything else is kind of blown up. Even if it is highly taxed, you still have a lot more value than anybody else around. I think you make a very valid point. Will there even be a taxation system going on?
With a system breakdown, we're talking about banks being closed. There's no credit. When there's no credit, nothing works. Your stores aren't going to be open. You won't be able to get gas. The real economy comes to a halt because the real economy runs on credit. So you're going to dial 911. Nobody's going to answer from the police. Nobody's going to answer from the fire department. Nobody's going to answer from the health department. Why, if you called the IRS, would they be answering the phone? I mean, it's going to be a shitstorm.
They'll be at home with their families. I don't think they'll be showing up to work that day. As far as like safe ways of storing precious metals, you'd mentioned a couple different thoughts and ideas there. Wanted to see if you could elaborate on that a little bit for us.
Yeah, you don't want to keep your stash all in one place. You want to have somewhere you can get to it. You might want to have 2 or 3 different vaults in the United States. You might want to have a vault outside of the United States. I personally store some in North Dakota because that's the only state in the country that's not part of the Federal Reserve System. Now, does that guarantee that my metal can't be confiscated? No, it doesn't, but it makes it more unlikely that a federal agent would ever be able to walk in, a banking agent, and say, tell us who your customers are and what do they have, because they don't have standing in North Dakota. But just don't keep it all in one place. And I mean, even if you don't have a big stack, let's say if you have a small stack, hide it, be ingenious, bury some, put some in a potted plant, put some in your basement. I mean, just be ingenious as to where you hide it. But if you have more than you're comfortable having at home, store, but don't store all in one location.
I think that's very sound advice, and there's many different kinds of places you can store at. One I will say do not use is bank safety deposit boxes. Bill's just talked about how the banks fail and that becomes collateral. So that's toast if you do that. But there are private safe deposit box facilities. There are other large vaults that will hold your metals. And then there's other vaulting facilities where you can buy a fraction of a gold bar or a silver bar.
Yeah, you don't want unallocated metal. You want allocated metal. Your metal is your metal. It should not be intermingled with anyone else's. I had stored some 2001 maple leafs back in close, 2002, 2003, and I wanted it delivered out to me in 2006. I got 2005 coins. So I was paying for segregation and I didn't get it. You don't want to be in a pool. You do not want a pooled account. You want a segregated account, plain and simple, because a pooled account, you want your own metal is all I'm saying. You do not want unallocated metal.
Yeah, it would be a problem. So here's my last question for you too. Do you have any thoughts or opinions on U.S. silver or gold versus, from other countries, from other?
If you're an American, you want U.S. mint lineage coin. And the 2 areas, one is junk silver, and then gold, you want either Eagles or pre-1933 gold. Pre-1933 gold is considered collectible. So you are not a hoarder. You are a collector. You want U.S. mint lineage coin because let's say that Trump or another president or whatever signs an executive order and says, we got to confiscate all the gold. There's a problem with that. The problem is the U.S. Mint makes Eagles, both silver and gold, every single year. They sell them to the public. In 1933, gold circulated as currency. Silver circulated as currency. They called the currency in, is what they did. How could the the US government say, well, our mint sold you some eagles last week, both gold or silver, whatever, but this week you got to turn them back in. How many years of lawsuits do you think there would be before you had to turn your metal in? Now, could they say that about Krugerrands? Could they say that about bars? Could they say that about generics or maple leafs or whatever? Yeah, that's bullion. That is not US Mint lineage coin that American investors paid for and bought. There's a difference.
Well, Bill, I want to thank you for coming on. This was great. I've been wanting to have you come on for a long time. Andy Schechtman speaks highly of you, and I've been working with him for quite a while. If people want to get in touch with you, I know you've got BillHolter.com. Is there any other place that you recommend they reach out to you?
If you want to contact me, you can go to my website, BillHolter.com. I do want to mention there's a great section called Grizzly's Corner for people who are prepping. There's all kinds of information. You can contact me through the site, or if you want to contact me, regarding gold and silver, you can go to my business email, which is bholter@proton.me.
Perfect. And I will put these links down below in the description so you guys can find it. If you're enjoying this content, please give us a thumbs up, as well as a subscribe and a bell icon. That way you guys don't miss any other notifications. And Bill, we'd love to have you on again in the future. And I want to thank you for your time today.
Thanks for having me, Jared.
Thank you.